And good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, August the 10th, 2022. Incredible trading day today. And I'm just going to dive right in. Picking up where I left off last night, I remember saying that I would not be surprised if the markets, once the CPI number was released, just bought it. No matter what the number was, no matter what the number meant, just buy it. And that's exactly what they did. They bought it. And this market took off very strongly, and all prior to the opening. So by the time we opened, it was almost a disappointment. In fact, within that first hour, we saw it try to rally a little bit more, couldn't, and then we got the sellers moved in. And essentially, what it really, in my mind, was reflecting was the initial buys. We had everybody just stampede, pushing the buy button, got it all the way up there. When the market finally opened, there were all those pre-scheduled orders to buy or sell on the opening. And that second, the sell came just because those were pre-scheduled. And there was quite a bit. It moved lower by quite a bit. So great moves though. And ultimately the S&P got up and got itself above that existing high that we had at let me just get this right there, that one at 4188, got above 4200 and got up to 4213. Now, could that have completed this particular sequence? In other words, either the intermediate A wave or the minor C wave or even the minute C wave to complete this move? Actually, this, my friends, goes with, excuse me, I need to move that back down over here and put this down just ever slightly because I just put it in the wrong place. And that's really where it belongs. So what we're looking at here, oops, wrong one. Oh boy, I'll move it. So what we're looking at here is that what I ended up doing was I moved the third wave, this little third wave, up one and the four over a little bit to finish that extended third. I had it there for, now I moved it up to here. And now we got a little four, and now we're in that fifth wave. And now let's take it down. Let's take a look at the hourly chart and we can take a peek at what all of this means. So if we're going to count this as the end of that third, and here's the fourth, and it's 1, 2, 1, 2, 3, 4, 5, 3, 4, and we're kind of coming up into that fifth. In fact, we made that new high, but it doesn't look like we're done. So what I will look for tomorrow is, again, some continuation here. Somebody got over there. And let's start looking at where we can find resistance. Well, we have resistance on a Fibonacci basis at 4228, I'm going to call it. And then prior to that, if I go back out to the daily chart, we've got the daily 200 EMA, and that is sitting at 4219. And then so we have 4219 to 4222 to 4227. Well, that all breaks. Then let me see if I got anything on the weekly chart that's going to come into play. Yep, but it's going to be up at 4341, and that's the weekly 50 SMA. We broke above the weekly EMA, 50 EMA at 4191. We broke above that today. So, and closed above it. So therefore, what comes up next are the others that I am now discussing. So again, we have 4222-ish, which isn't too far from where we were. So, but that'll be resistance. 227 will be resistance. Then we have 4275, 4300, and then we have the daily 200 SMA at 4327. And we are kind of getting into what some would consider nosebleed sections. And we have continued. And by the way, these Fibonacci retracements are for this wave. So I'm just putting it out there. This wave 2 can remain as a wave 2 unless it breaks above. I'm going to say here, but it really can go all the way up. It just can't break that high, 46.31, but it can go up and almost equal it. So we should continue to find and both continue to run in conjunction with one another, parallel to one another. One will take over and one we'll see, but unfortunately, it might have to wait until we actually do begin that next decline. And the whole world's probably going like, well, what's going to trigger? What's going to trigger? It's like, I don't know. I can just tell you that I am expecting it. I couldn't tell you at exactly what day and time it's going to happen, but I'm looking for the market to turn. And once it does, I continue to look for the same type of activity, the same action. And that would be that we start to just move. And so on the daily, it's getting below the daily 4, the daily 8, the daily 20, the daily 50, etc. as we start to come back. Again, that first move should make no bones about it, should start coming down below 42, below 41, below 4,000. That would be the initial move. It may take a day, might take 2. But whatever is going to turn these markets, it should be convincing if indeed we're dropping into a third wave down. Yes, it's still there. Again, I'm not trying to be wishy-washy. I'm going to continue to say what we really need to focus on, folks, is trading the price action, understanding the supply and demand ratios. When we had what we had today, the demand was from the buy side. They all wanted it. Sellers were there, so it wasn't like we had a total absence of sellers, but they had to have a reason to sell. And that may have been connected to what they were trading in the options, what they were trading in the underlying in these stocks, et cetera, et cetera. But the sellers were more involved today than we've seen like here. When we did this, there was an absence of sellers. The volume was low. Volume picked up today. So it could have been just a lot of acquiescing, a lot of just caving and going like, I can't take it, cover my short, get me long. Whatever took place, the volume did reflect it. So again, if we reach the high, what's going to be the signal that it's there? Well, that it turns and that level is rejected and that we start to break below these moving averages. Now, having said that, we've seen this picture once, twice, 3 times, 4 times. We've seen it. The levels rejected, the market declines rejected, rejected, rejected. And when you look at it on the daily, it's like, that doesn't look like all that much, but that's 41.50 and that's 40.80. It's a $70 S&P drop, S&P points drop. So yeah, the levels are rejected. This as well got up there and then it rejected. It was a steep drop, took it back, but it still was a steep drop. So I'd be looking for it, but not to come back. In other words, the sellers come back in and they keep on selling. So there will be a purpose. There'll be a reason. There'll be something out there that's going to change the tone of what's taking place. That's just my personal opinion from experience in trading the markets. Initially tomorrow, I am going to continue to look for additional upside. Please remember, tomorrow morning, pre-market, we will get the PPI and the employment jobless claims. Now, those jobless claims may take us and be more in tune with what we saw last Friday with the employment situation for July. That was not bullish. It was bearish in terms of all those people going back to work. Yep, glad to see it. I truly am. But in terms of inflation, that's inflationary. So it's not going to calm inflation. I'm glad that people are getting work and that they're going back to work, but it doesn't take care of that inflation problem. So that may put a damper on whatever the PPI may be wanting to say. So there could be a little bit of a dichotomy and a little bit of a misbalance there, and we get some really bad and big and ugly swings. So, but we'll see. But ultimately, I'm looking for continued upside. I'm looking for the market to get to these levels and 42.27, possibly 42.50, possibly maybe just cruising on up and through. So if we consider that where we are right now, we're at 42.10. If we get another, what were we up, like 80 points? We're almost at 4,300. So impossible? No, it is very possible. So that is about it. Continue to please include that we're looking at the order flow volume profile. That's big, because that's where we find points of control, value area high, value area low. We get to see where previous points of control were, ones that were never really canceled out. So they became in, but then they kind of stay. And you'll see that they come what we call naked point of control, where that line will just stay on that chart and keep moving to the right as the market advances or declines, and that stays in. Therefore, it's still active. Value area highs that go unchallenged or value area lows that go unchallenged remain in play. So you'll see them, but they can be just there until the market comes down and activates them to be removed. So we get a lot of that. We get naked value areas, naked points of control, extended value areas, and then initial ranges, initial points of interest. And those are important because, in all honesty, when you're kind of plugging in where you're going to buy, I'm sure that there's a space where they can put to particular levels. And the market will go to those levels according to what the premium, not the premium, excuse me, to what the value area is. So where the supply and demand is falling. So if the demand is from the buy side, well, only so much can be sold at a particular level. And if they still need more, ding, 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 it just starts to go up. It's searching for the next value area. Where can they get the order filled? So that's what happens. And then conversely, if the order flow is showing that the demand is for selling, that the sellers are looking for buyers, same thing now in reverse. We're looking for the value where the sellers and the buyers can meet and exchange and then go forward. If the selling is too high in depression, well, then what happens? They're just going to start pushing it. But it's good to have an idea, what's the next level? Where can it drop to? So we have the following. We've got the order flow volume profile. We have the moving averages, which continue to demonstrate trend. We're now coming up to the daily 200. That's major numbers up there, folks. Major levels. In terms of breaking, and if we get these moving averages to come up and break above it, then it truly is back in to a very strong upside move. Now, up to this point, I'm continuing to just trade without a bias, but that doesn't mean that I don't see the intensity of a move in either direction, but I'm trading price action versus being bullish or bearish. If I'm bullish, I'm cheering on my position. I want it to go up. Oh, go up, go up, go up. Oh, yeah, you guys are all feeling silly for thinking that this is a bearish move. Boom, boom, boom. I don't talk about what I'm looking for in the market based on what my positions are. I stay totally open. I will trade up. I will trade down. In fact, most of my trades today were longs, and it was an incredibly profitable trading day. starting from the release of that number this morning. Let's all have a great trading day tomorrow. Use the tools to your advantage. Stand amongst the chaos and don't let the chaos get a hold of you. You're in the eye of the storm, everything's swirling around you, and you're just calmly looking because you can see where the markets may go because you've got all of your indicators lined up. You've got some points of interest that the market can drive to. Well, you got your trade set up. All right, that's enough for today. Our next update will be on Thursday, August 11th.